Ashok, your thoughts on what's happening in EM at the moment?
Yeah, so, EM has had, kind of a rough spell here the last 6 weeks. And, our view, it's been driven by, obviously, the dollar strengthening, some election concerns that are, for the summer season in emerging markets, and then the move higher in U.S. rates. But our sense is that, EM growth remains pretty strong, and that EM securities are going to find, some sort of bottom around these types of levels. So our general view is that, one's supposed to be, a buyer of emerging market securities, both hard currency and local currency around these levels, not a seller.
Ashok, has the froth been taken out? And the reason I ask this is it was only a year ago that Argentina was able to come to market with a century bond, and that century bond now trades with an 85 handle in the market. And I'm just wondering why we continually get this wrong with countries like Argentina and how quickly they break. What's going on, Ashok?
I think the fundamental driver of it has been the low interest rate environment. It's been the low rates in the U.S. It's been the low rates in Japan and Europe. And as the central banks have expanded their purchases of treasuries and mortgages, that's led to yield-seeking behavior across the world. And that tide is receding, and that sort of overall theme is going to be with us, we think, for several years. And so that led to some short-term, perhaps short-term exuberance in emerging markets. But as things reprice, I think you got to view it as where our current levels are, but expect that this volatility we're seeing in credit spreads, it's going to be with us for a while.
Your thoughts on whether you want the FX exposure when you do go and take that exposure to EM at the moment, Ashok, because there was some enthusiasm over the last year, fueled by the weaker dollar. We've seen a turn over the last month. Are you confident you want to take that EM FX risk?
Yeah, that is very, currency specific, but places like Mexico, that's had a pretty sharp move from 18 on the U.S. dollar to, around 19.5 this morning, and, in a very short order. That's a currency where we probably prefer to take a little local risk, but there's other currencies in, Central Europe that we're probably just a little bit more cautious on even after the recent sell-off.